to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. Good morning, AJ.
Good morning, Sip. How are you doing?
Doing fabulous. Happy episode 75. We caught ourselves on a bit of a holiday weekend. We don't have the markets open today, but we got some economic news. What are your thoughts on everything?
Economic news. Well, let's pull it up. When we take a look at the week has been kind of a weird week, hasn't it? So we had this job. So everybody's focused, of course, back on the topic of inflation, right? And so they're all worried about whether the Fed is going to be raising interest rates and continuing on this very hawkish tightening of the economy. So they were looking at job opening and labor turnover survey report on Tuesday. They looked at this private company, the ADP employment report, which they always have this report coming out on Wednesday ahead of the Friday, like official government report. So this number created a little bit of interest throughout the week. And then this number, it's kind of like everybody is trying to figure out what's going to come out here so that they can figure out what happens at the next Fed meeting. But let's just jump to here because all of the build up to having
today you mean, right? Today's employment numbers.
Yeah. Today's employment numbers. So the employment numbers came in as expected, right? Lower than previous. So 236,000 new jobs. And previous was 326,000 after it was revised. Now, this number is pretty interesting, and it kind of confuses people. This number went down. That's the unemployment rate. But remember, these two things are two different surveys that the government does every month. And so they're not really related. They're asking two different questions to two different groups of people. The top question is to actual employers, whereas the bottom question is to the general public. And so it's almost the data rarely has correlation. And most people are more interested in the payroll numbers, the first number. So that's showing that, hey, the Fed is having a good role of kind of slowing things down, which is what they want to do, because when things slow down, prices slow down as well. Prices don't increase. Here's private payrolls. They really dropped. Manufacturing, we were hoping to actually create 10,000 jobs. We actually lost 1,000 jobs. It looks like people are going back to work, which means, there's been these talking points about how too much money was given out to the public during the pandemic, and now they don't have to work because they're living off of all that money. Well, this shows that money is starting to dry up, and maybe we won't have to listen to those talking points anymore. And this is kind of the big number here. This number is dropping pretty quickly. This is the average hourly earnings year over year. This shows inflation, and you can see that this number is dropping month after month. It was 4.6% last month. It's now 4.2%. This number, if the Fed, was sort of happy, they'd be happy. In fact, this is the lowest that the number's been since way before even the pandemic started, even before that. So this is actually a pretty good number for the Fed to, be happy about. But yet, with all of this news, Sip, if we take a look at what investors think is going to happen, investors think that the Fed is going to raise the interest rate by a quarter point early May. It's like May 2nd and May 3rd is the next Fed meeting. And this is a little bit different than even, 2 days ago. 2 days ago, it was more like 50-50. Well, now, after today's employment report, it really looks like sentiment is, yeah, that quarter point rate hike is coming versus this number over here, which is nothing's going to happen, right?
And so the market would take this news as positive or negative, or are we still kind of in this lull where we're getting a little bit of good, a little bit of bad, and we're still in that midpoint area? I don't know.
I think the market on Monday, and it again, it depends on what happens over the weekend. What if another bank fails? I mean, it's been 6 weeks now since the banks have been doing any sort of failing, and there seems to be a calm there. But if something happens over the weekend, anything's possible. But as of right now, I would expect the markets to take this pretty positively. This employment report.
It makes you think whether those 75 basis point moves were like the catalyst to some of these bonds and the financials getting hit. But if we keep getting the quarter points, well, maybe we have a strong enough, resilient enough economy to weather those. And so I think that might be close of a close conversation. And then we always touch on the bonds, and
Yeah,
here
and I can't I just it always amazes me because in on one hand is saying one thing from the Fed, and then the other hand is doing this other thing. So just to put it into perspective for those folks who haven't been tuning in to our show over the last weeks, the Fed has more than one tool that they use in order to kind of manage the US economy. They've got their interest rates, which gets all the media attention. They also have their rhetoric. So, when they get interviewed, those interviews are not just off the cuff. These people know exactly what they're saying because they know that their words are hung on by like everybody, including investors, but also businesses that are making strategic business plans. I mean, their words carry so much clout. But then there's this thing that, whether you call it their balance sheet or whether you call it quantitative easing, this is a tool that they never really started using until about 2008. So about 15 years ago. And they started to use it heavily to help us with that recession that was going to turn into a depression the size of like the stock market crash of 1929 if the Fed didn't do something drastic. So they started using this tool. And one of the issues is that this tool has kind of like been, like a drug, meaning that once you start using it, it's so hard to get off it. And if I go back here and look at all time, you can see this is what the tool was like pre 2008. And then they started to use it a little, and then they couldn't kind of get themselves off of it at that point. In fact, they were using it more and more. And then they kind of took a little break here in around 2015, and they were going to stop using it and they were going to get off of the sauce, and they actually were at a point where they were letting bonds expire and not renewing them. And so you could see that they were kind of going through the withdrawal symptoms, but they were doing it okay. And then check out what happened next, man. This wasn't even the pandemic yet. They were worried that the economy was kind of slowing down. This was maybe this is hearsay, but maybe influenced by the current administration that was there. They wanted to make things seem like it was really hot. So they started buying bonds again. Then COVID hit and they did this huge. Now notice the amount of medicine it took using this tool, the amount of the drug that it took in order to curb the great recession was this amount. And then all of a sudden, in order to curb the pandemic, it was this amount. And it just goes to show that like the drug loses its effectiveness and you need more and more of it, but it kind of gets us in more and more trouble. So here we are, instead of taking years and letting things naturally kind of get better, the Fed took a stance that they're going to go cold turkey, and they started selling bonds. And it turns out that whether or not that led to these most recent bank declines is still up for scrutiny. But look, they decided to take that medicine again, start, getting back on the sauce in order to curb that drug, those banking fails. Because this bond buying and selling, not many people really understand what it is. In fact, I would even argue to say that the Fed really doesn't understand the power of it. I don't understand the power of it, but I can tell you what the results are. The results is when they do that bond buying, it lowers mortgage rates, and it lowers any sort of problems with bond yields getting out of control. And so that's what happened, right? Bond yields got out of control, making the bonds that these banks had invested in uh, not as valuable as they were when they first invested in them. And so then when leaks of the banks having weakness came out, and all the depositors were like, well, I'm going to take my money and move it over to the more secure banks like a Chase or a Capital One or a Wells Fargo or a Citigroup. They moved their money from these medium and small banks over to the big banks, and those small banks had to make good on, giving the depositors back their money. And so they had to go and sell some of these bonds, and these bonds were not nearly as valuable as they were when they bought them, because the Fed had been manipulating rates. And so that's why you can see the Fed had to take some medicine to kind of calm down that bond devaluation, because a lot of these mid-sized banks that are not under the scrutiny of stress tests have been investing in those bonds thinking that they would never lose value. Well, when the Fed sells bonds at the pace that they have been, going cold turkey on this quantitative easing tool, it has all sorts of ramifications throughout all parts of the economy. And that's what we've seen. So I don't know what they're going to do next. I don't think that they can go as aggressive as they have been, Sip. I think that they have to take it pretty easy when they're getting off this sauce, but it's going to take a long time to get off this sauce, man.
Yeah.
If they ever do.
Yeah, and it's crazy to think that it's only been around for like 15 years, right? Have we seen the negative effects, looking over longer periods of time? Maybe not. And just looking at that chart, like, given your experience, things that go up like that, they can come down just as quickly, right? And that's a part of the equation that we as investors and traders are always trying to look at and see. But what I appreciate about you and Trading Trainer in the community is that no matter what's going on, you're implementing strategies that take advantage, but also protect. And there's a lot of risk involved. And so that's why we've got the show. Do we want to jump into where the S&P is and maybe take a look at the VIX? Because I imagine the VIX has been dropping. Like you said, it's been a subtle week.
Mm-hmm. So here's the S&P. So last week we, fully said that. Let's jump into a 3-month chart so we can get a close look. So as soon as we passed this previous closing high that we had, so as soon as we passed that in our retracement, so I'm going to just draw a line here, then we realized that we were no longer in the downtrend that we had been in since, the beginning of February. So we're starting a new uptrend. This is called a range expansion move, and the range expansion in this case is in the up direction. And so now these days of employment kind of confusion have pulled the market back a little bit. Well, I guess one of the questions that you might ask yourself, and again, we think that, barring any sort of jarring news over the weekend, that on Tuesday or on Monday when the markets reconvene, that we'll probably see some buying again. But does this little pullback, worry these traders who have been trading the uptrend? I don't think so, because we've already expanded past the ideal mark for a good expansion phase. It's actually, time for what we call a retraction or a contraction phase. And we would expect any good contraction phase to come to about halfway the previous move. So it's about time that one of these contraction phases, if you have an expansion phase that lasts too long, it tends, what goes up tends to crash back down pretty quickly. So having a contraction phase right about now, pulling back to about the halfway mark, and then regrouping and going higher wouldn't be a bad thing. So having 2 weeks of pullback, I think, is actually not a bad thing. But I also want to make sure we draw people's attention overall to like the last 6 months, even the last year. You have these mid-duration uptrends and downtrends, downtrend, uptrend, downtrend, uptrend. You have these things, but when we look at the long trend, I mean, just take a look. It's just sideways. So you need to arm yourself with some sort of strategy in order to make your investments work in sideways, choppy markets. And that's what I would recommend for all of our viewers, whether you're doing it now or not. Focus your efforts on sideways, choppy markets. How can you profit off of them?
Well, we know the answer, right? We know
I
we
know the
we know
answer.
the answer that, and if people want to find specifics, if they want to dedicate the time to learning, we're going to go ahead and throw the link to your daily workshop, right?
Mm-hmm.
Generating some serious income, right? That's a
Mm-hmm.
fact, right? Like
Mm-hmm.
a monthly paycheck, right? That's the strategy put in place. So if you got a portfolio, you're looking at this choppy market and you're thinking to yourself, oh, should I buy something? Should I hold? There's a strategy using the power of options, selling premium, where you could take advantage of it. So what we're going to do here in the show is AJ's got some names that he's going to go through where he's going to talk about these strategies, some names that he's looking at now, some names that the community is looking at. If you're watching and you have a name that you want AJ to look at, feel free to throw it into the chat. We're going to take a little break. We'll come back. We'll talk a little bit of news and we'll dig into some of the examples. So stay tuned, everyone.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
You know what's funny is ever since we started doing the options show, I remember sending you a message not too long ago that crypto.com has rolled out an options feature for
Mm-hmm.
crypto. And now my mindset of going into positions is always thinking of an entry, an exit, the risk, the reward,
Mm-hmm.
and that's kind of the beauty and the power of options. So if anyone hasn't given it a try, check out the webinar. Take a look into whatever brokerage account you use, the usage of how you get into trades, how you get out of trades, options specifically. Some are easier than others. Otherwise, let's dig into the news, right? What do we
Yeah.
got out there? A big one that you brought up before the show was Tesla dropping the price of their car.
Yeah, it seems like, especially their more expensive models. I think that they're on the smaller models. So I think it's called the Model 3 and the Model Y. I think they've dropped prices yet again. This is like the 3rd price drop. I think those guys have dropped by about $1,000, making them, right there for that federal stipend, the federal credit that you can get for buying an electric car. But the more expensive ones, the Model S and the Model X, they dropped last night by $5,000 each. So if and I've heard that their plant, I have a good friend who actually is an engineer at Tesla who spends a lot of time at the Fremont plant in Fremont, California, in the Bay Area. And they're overproducing Model S's. And so any company never wants to have too much inventory, right? They'd rather produce at the same rate that people are buying. So it looks like they're trying to spur some purchases on those higher end cars.
Yeah, and actually not too long ago, like last week or so, I pulled into a parking lot at on like the top floor, and all around the side of the railing were the Tesla charging stations, right? And
Okay.
it was like 40 of them. And
Okay.
people were like parking, they were going to the shopping center shopping, and I was like, "Oh, this is starting to look like normality, right? Like
Right.
it's like instead of stopping by the gas station, we'll stop by the mall area and we'll charge the car up and we'll hang out and then we'll like
Right.
you kind of have to kill some time, but they've made it seem like fun almost.
Yeah, if you can figure out how to kill that time with something that you were gonna do anyways, grocery shopping or whatever.
Exactly.
The other thing is Tesla's got a new stream of income. If you think about it, they have gotten into agreements with the federal government to open up. Remember, their charging network was just for Teslas. And the government said, "Hey, we'll give you a whole bunch of money and it'll save us a bunch of money because we said that we would invest in building the charging network if you can figure out how to open up your Tesla chargers to the rest of the other cars." And so that's what they've been doing, and they've been getting a whole bunch of government money for doing that. So you'll probably start seeing those other types of cars at those Tesla charging stations that we've seen for the last few years.
I just still feel nervous, like, oh, I'm gonna run out of battery, like
Yeah.
wait.
I haven't crossed the threshold, although my wife and I have been looking. We've been looking at different EVs and also looking at the future of EVs, like what's going to be happening in the next few years. So it'll be our next purchase for sure.
I see you as a Cybertruck type of guy, AJ.
Uh, Actually, it's funny that you say that. When we were in Colorado these last couple of weeks, they gave us a Suburban. And we were like, "Oh my god, this thing is like a tank." But then very quickly we're like, "We can't live without something this awesome." So we were like looking at Suburbans and Cadillac EVs and figuring out when that's going to happen. So it looks like GM's got some plans to do that in the next few years.
Yeah, very interesting. I feel like it ties into our next note, right? And that
Mhm.
is electric cars use up a lot of metals, right? And I would assume with these batteries and whatnot. And last week we had one of our guests, Alex from Wyoming, chat us about the uranium ETF,
Mhm.
and you've got some follow up to that.
Well, yeah. So when I lived full time in Colorado, I lived in Fort Collins. That's where Trading Trainer is actually based. That's where we have our main office. The Fort Collins is not that far from Wyoming. Fort Collins is about maybe an hour drive north to Wyoming. And I remember living there, and Wyoming had become this like fossil fuel place. Like you would look at the mountains in Wyoming and they'd have these pipes coming down with all the natural gas flowing out of them. Well, it turns out in my visit, this most recent visit, Wyoming's been divesting themselves from coal. The natural gas is slowing down all that investment, but TerraPower, that's that company owned by Bill Gates that's been exploring different reactor designs that are way different than the current light water reactor designs. TerraPower is building a huge reactor in Wyoming, and they have options. Speaking of options, they've put in a little bit of money for the ability to build 5 more reactors. And so this building is actually all the people in Wyoming are kind of, excited that even the community colleges there are now including nuclear programs because they're training the local people of Wyoming on how to work in these new types of nuclear power plants. So it looks like Wyoming is going to perhaps be the state that is going to be leading the charge and pioneering all of these this rebirth of nuclear, this new green fuel, right? Because nuclear doesn't contribute carbon to the atmosphere. So there's a lot of federal investment. There's a lot of just investment by private companies as well into these technologies. Bill Gates, he's got a lot of leftover money from when Microsoft had its heyday. So that's just really interesting. Alex brought up that to our attention with his play on the uranium ETF, but it might be because Alex is right in that talk, and there's a lot of talk about nuclear in Wyoming right now.
Yeah, and that's one of those, hey, I like the long term. Maybe I own the stock and sell premium as a monthly paycheck, quarterly
Yes.
paycheck.
Yeah, and
Uh,
even we could use our naked put strategy in order to get into it at the price we want to, and otherwise get a premium for even attempting to buy it.
That's right. That's right. All right. Well, this week we've got a topic that I think is a really good one that we can spend some time on. And this is for new traders, old traders, traders
Everybody.
of all the sorts. And it really, there's a strategy, and then there's what tools do you have to help you utilize the strategy. And so the topic for this week is how to build a good watch list. And so, AJ,
Right.
what is your perspective? How do you go about building the watch list that you and everyone, not everyone, but that you share with Trading Trader every week in the community?
Yeah. Well, I actually wanted to know from you first. What do you do? How do you decide what, whether it's ETFs, stocks, indexes, cryptos, how do you decide which ones you're going to follow? I'm just curious.
Well, for me now, I just whatever we talk about on the show, I put it in my Robinhood watch list, and then I try to remember the levels. Like I was looking at Wendy's. Wendy's is one that's on my watch list because I liked the setup.
Yeah.
That's it though for me.
So what we do, or what I've always done, and then I've got these screeners that I've programmed that are part of the Trading Trainer, offering. So when you sign up for one of our programs, you access our screeners. They're initially based on a fundamental screen because I don't want any underlying symbols on my watch list that are schleps. So I make sure, there's these measurements in fundamentals that are relative. So they rate stocks based on how well they're earning or their relative price or anything like that compared to all the other stocks out there. So for instance, one thing I look for on any symbol I'm going to have on my watch list is that its earnings per share rating is 80 or above. So it's better than 80% of the other stocks out there. And I make sure that the relative strength index is 90 or above. So I want it to be better than 90% of the stocks out there. And then I also look at the industry group strength. That's another measurement, a fundamentals-based measurement. And I make sure that it's either an A-, an A, or an A+. So I'm looking for the strongest, best of the best underlying symbol candidates. And then the next criteria I use is it optionable? Because if it's not optionable and I can't use all my option strategies on it, I'm not interested. So it's got to be optionable. And then even going deeper than that, the option chain has to have liquidity. In other words, it could be optionable, but if there's not traders in there, if there's not investors buying and selling, then you're going to go in there and try to buy some of this stuff and nobody's going to be there to sell it to you. Or you might get a hold of some of these options and you won't be able to sell it when you want to because there's nobody to buy it from you. So I make sure that it's optionable, but even more that it's got liquidity, that there's people in there buying and selling. And then it comes down to pattern matching, right? Because option strategies, you can tune option strategies. I was telling my program participants last night about, by selecting the different strategies and selecting strike prices and expiration dates, these options are not all the same. They actually behave totally different, like totally different. And so you want to know what option strategy you're focused on and then look for those patterns in those, strong symbols and then, filter it that way. So like, for instance, if you're looking for premium selling, you'd look for any of those patterns that are sideways, choppy channeling with perhaps some implied volatility that's on the higher side. But you want to match your strategies the way you're going to trade whatever investment vehicle you're trading to that watch list so that you filter it further. And I guess the only other criteria you might be looking at is the price, right? What can you afford? What risk tolerance? What does your risk appetite allow you to afford? when it comes to underlying symbols. And that's how I have always crafted my watch lists. First, start with fundamentals, then go ahead and make sure it's got options and it's optionable and there's people trading the options, and then pattern matching.
And I'm curious, like what does that number look like? How many names are on that watch list?
I think right now we've got something like 160 candidates on the watch list that is optionable and has liquidity and meets all the fundamental criteria. And then, from that 160, because we trade all the different option strategies, we can then say of that 160, how many right now, we can do a quick scan and determine how many are good for selling premium, how many good are for using option swing trading strategies, how many are good for doing implied volatility plays, things like that.
Awesome. And cool. So if anybody's interested in learning and seeing some of these things a little bit more firsthand, AJ does have an awesome freebie section on the website on Trading Trainer. So
Absolutely.
jump in there, and there's definitely going to be some more insight on watch list strategies. Oh, another question that I had was these are all, do you need to see if it's in a specific market? Like, do they have to trade at the CBOE? Like, do you distinguish the exchanges in there as well?
Well, most of the stuff that we're doing is in the U.S. market, traded in the U.S. markets, but that's about it. Right now, these days, with most brokers, you have access to all the different exchanges. I mean, if you actually fine tune your broker and place a trade for a particular security, you might be able to uncover which exchange it went to, and it's all automated now. The brokers have this intelligent system where when you place a trade for what you want, it'll go to the right exchange with the best price. And so just my watch list is focused here in the US because I'm focused in the US and it is the biggest market out there. But other than that, I don't worry about, exchanges or anything like that.
Sure. Yeah, I mean, I'm sure that's what, the hedge funds and those super crafty investment networks are, doing those foreign trades, which, hey, there is a market for it. Why not?
Mm-hmm.
So let's go ahead and dig into some specific names, right? This is your pick of the week this week is one that we covered not too long ago as we came off of the drama from the Silicon Bank failure. And this is Wells Fargo, WFC. And the question you have here is, do we dare? Do we
And
dare?
actually, I think we did Wells Fargo and Wendy's last week. I wanted to look at Wells Fargo again, just to see, because we had given kind of a signal that we would be interested in Wells Fargo, and it continues to stall. So both Wells Fargo and my main pick of the week, which is going to be General Motors, I have the same sort of advice for people. So let's look at Wells Fargo really quick. You see that it's stalling here. And, if you look over here, we got a signal on March 27th. On March 27th, we had this signal, but it didn't have any validation. And what I've noticed is that a lot of folks who are new, or even some of my folks that have been around a while, they get kind of complacent to using a single indicator to signal a trade. And I wouldn't do that. I would validate whatever primary indicator you're using with some sort of tried and true validation method, whether it be volume, accumulation, distribution, things like that. And so, as you can see, we did get this signal. This is a fast MACD. And so I love using the fast MACD. That's from our folks over at the MACD kind of think tank. All the difference is instead of setting your MACD for the default, which is 12, 26, and 9, the fast MACD is with the fast average of 6, the slow average of 19, and the EMA of 3. So 6, 19, 3. And that fast MACD gives us signals that are right on the right time frame for most premium selling. So I got a signal, and a signal happens when the MACD line crosses the MACD average line. And most of your charting packages will actually give you an arrow, either a green or a red arrow, depending which way it crosses. So we got our signal over here for the Wells Fargo on the evening of March 27th. So that was a couple weeks ago. Question is was that signal a valid signal? And I like to use volume validation. So for our users, what that means is that the volume is above the 50-day volume average, criteria 1. Criteria 2 would be that the volume is heavier than the previous day, which you can see here it wasn't. And criteria 3, that we have building volume for at least 3 trading days. That means the volume is getting more and more leading up to that signal. And in this case, we didn't get any of that. And so this signal to actually do trading on this day wasn't a valid signal. And so we wouldn't have traded the next day. And I always see people trying to trade on days where the signal wasn't validated. In fact, looking over here, the first time that we're even getting close to a valid signal isn't even this past yesterday. We'd have to see what happens on Monday. I have a feeling on Monday we'll finally get a validated signal to think about going long on Wells Fargo.
And so you're saying that you have a similar setup in General Motors?
Yeah. So let's look at General Motors, because General Motors is one of those symbols where I will trade it all day and all night for selling premium. They've got great liquidity on the option chain. In fact, just for those of you that have experience selling premium, I would definitely substitute the stock with some sort of back month options replacement, stock replacement, an option, and create a diagonal debit spread. General Motors is just primed for that. And so with that said, let me get rid of my marks from Wells Fargo. General Motors gave us one of these signals on March 21st. But let's look at, I'm going to zoom in on this so people can really see what I'm talking about. Did we have volume validation on that evening after the trading day? Well, first of all, is the volume higher than this 50-day average? I would say a big fat no. I'll put an X there. Is volume heavier than the previous day? No. So 2 strikes. And then is volume building? Actually, volume is dropping down. So 3 strikes, you're out. The signal is not a valid signal. So don't follow invalid signals, right? Just because the fast MACD gave us a price crossing doesn't mean that it is giving us the volume validation, telling us that investors are behind that. The other thing I look for, kind of my bonus one, is it a good price pattern? So it is a good price pattern, but with the lack of volume validation, I wouldn't follow it. And sure enough, the next day, it continued down. And we haven't really gotten another signal. It looks like General Motors is going to have what we call a double bottom, and it's this second bottom that I'm looking for the good signal. But the reason why I featured General Motors is I bet you that's going to be coming in the next couple of trading days. So I want you to look for your signal. I would use the fast MACD as we explained, 619.3. And then make sure when you get your end of day signal. So look at this after the market's closed. Look for a crossing after the market's closed. Make sure it has volume validation and good price action. And then and only then try to trade it the next day. Look for follow through. Make sure that trading day price is going in the direction you want it to. And I think you're going to have a recipe for success.
All right. So that's General Motors. Nice little setup heading into the holiday weekend. All right. So we've got a couple names from our users, our guests, our fans from around the country, around the world. And this is the speed round. And so we'll just dig right into it. We'll head on over to Twin Falls, Idaho. And this is Bill wanting to know your opinion on Morgan Stanley, ticker symbol MS.
All right. Well, okay. First thing I want to talk about is our price. So Morgan Stanley is trading at about $85. So let's just do some math in our head. In fact, maybe if I press this button here, sure enough, I can pull up a calculator. So follow along with my math, everybody. So say, for instance, that a typical premium selling strategy based on the stock can have as much as about 15% risk. That means if all hell breaks loose, your position could lose 15%. All right, great. So at a $100,000 portfolio, man, you would lose $15,000 if you put all $100,000 into that trade. That's a lot of loss, and most people wouldn't allow that. That's too big of an appetite for risk. And so what most people do is they cap their risk appetite. And for a $100,000 portfolio, they'd probably cap it at about 2%. I recommend people kind of cap their appetite for portfolio loss to no more than 4. And I suggest you actually sway more to 2%. That means you could only lose $2,000 of your portfolio. But this trade has an inherent risk of about 15%. So if that's the case, we only want to trade about 13 and a third percent of our portfolio in this trade. So for instance, if I were to take a $13,333 of that $100,000 portfolio, and all hell breaks loose, and I hit my stop loss and I lose 15%, that 15% would be that $2,000 loss, max loss that I want to, I don't want to expose my portfolio to any more than that. So, okay, we're limiting ourselves to about 13% of our portfolio. And this thing is trading roughly at $85. And don't forget to do one single contract of a premium selling. You have to own 100 shares of the stock. So 85 times 100, right? $8,500. And if that's going to be 13% of your portfolio, it was about 13 and a third. So I added some threes there. You're going to need to have a $64,000, $63,750 portfolio to even invest one contract into this, to make sure that the risk isn't bigger than your risk appetite. So the first thing that comes to my mind when I look at Morgan Stanley is that it's expensive and you need to have a big portfolio in order to trade it. You're going to have more than a $64,000 portfolio. So that's the first thing I want to check with you. Do you have a portfolio that's valued more than $64,000? Because otherwise, Morgan Stanley is out of your range. So I just wanted to make sure people are aware of that whole risk kind of appetite piece. And if you're doing diagonal spreads or anything like that, the risk is even more. And that means you'd be investing less of your portfolio in order to manage that risk. Next thing, I'm going to look at the option chain. I look specifically at options that are about 3 to 6 months out. They're trading every $5. I see some other options on different exchanges as we get closer to at the money that are trading every $2.50. So that's good to know. And I do see that there is some healthy trading on the options. There's a nice bid-ask spread. There's open interest. So there are buyers and sellers. And I do believe even at the $5, but especially at the $2.50 rate, that we would be able to do our strategies on this. So my knee-jerk reaction is, so long as you have a big portfolio, this looks like a really nice position. It's been sideways channeling. I'm looking at a one-year chart right now. Let's look at a two-year chart. Morgan Stanley's been going sideways. I have a feeling that has something to do with their huge dividend. Investors, because they're getting such a big dividend, aren't pushing on Morgan Stanley to raise their stock price. So it's going sideways. It's perfect for us. It's actually forming a bottom. Like we said for General Motors and Wells Fargo Bank, make sure you get a valid signal before you take any action on this. And the only caveat is you have to have a big portfolio. Don't overextend yourself by buying something you can't afford.
All right. Well, definitely need to take the risk into consideration when looking at Morgan Stanley, but the setup, you're right, it is forming in the way that you like to see it. So
It really is.
there you go, Bill. Morgan Stanley insights. Let's keep moving on to the next user question. And this is Ming from Berkeley, California, interested in an airline name, American Airlines, ticker symbol AAL, I believe. Let me double
Ming.
check. Yep, AAL, correct.
You're totally named after an amazing dynasty. Okay, with that said, we've been trading American Airlines here at Trading Trainer for a while. I'm not currently in a position on American Airlines, but I'm looking over the last year. They haven't started giving back dividends. Let me just quickly pull back over here. Yeah, they gave dividends for quite some time. They stopped for a minute there again around the Great Recession when there was questions whether even airlines would live, but then they were giving it dividends, and then around 2019 they stopped again. Coming on back to current, it's a good pattern. It's not so consistent. What I like to look at when I'm looking for a pattern to sell premium against is I like things that, almost cyclically that you can set your watch on, touch support and resistance. And that's not this one. But at the same time, it looks like we are down, finding a level of support here at about $14. It's a great price, by the way, meaning that it's available to almost everybody's portfolio. You don't have to have too big of a portfolio. It looks like we're forming a bottom here. We just on Wednesday got a signal that it hasn't formed a bottom yet, but I wouldn't doubt that next week we get another signal that a bottom is there. Make sure it's validated. But yeah, I could see looking to get into some premium selling on American Airlines. I know that they have a lot of activity in their options chain. So yeah, American Airlines, let's look for an entry on it next week.
All right, American Airlines. Appreciate that one, Ming. Moving on to our next name. This is Pam from Riverside, California. Ticker symbol JD. JD.com. Do they have a name other than JD? That's it.
JD.com. That's the name of it's a Chinese company, if my memory serves me. It's a Chinese company that sells stuff at JD.com. Mostly electronics, but they got all kinds of good stuff that comes right out of China. I think it's a company based in Beijing. You can kind of tell that it's a company with a lot of investors that are trading after hours. That's why you see closing prices that don't match up with opening prices the next day. They're trading, their hours, their waking hours. So yeah, okay. I usually don't, so I'm limited by the options market. So we talked about the importance of making sure that your underlying symbol, whether it be a stock, an ETF, or an index, is optionable. Because if it's not optionable, you're not going to trade option strategies on it. We also talked about that there is a active options market, meaning there's buyers and sellers of the options in the option chain. Otherwise, again, it's not going to work for you. But the other thing that maybe I'm interested in when it comes to these options is the fact that options aren't traded after hours the way that stocks are, or their underlying symbols are. ETFs are, and indexes are often traded after hours as well. So because of that, I have to be careful, because when the options market closes, and I think my positions are valued at a certain amount. If the underlying symbol gaps at all because of after hours trading, the next morning, a position that the previous evening when it market closed was perfectly in the black could be dangerously in the red. And so I don't like those surprises. And so I usually don't trade ones that have big gaps or the potential for big gaps. With that said, I'm looking at JD over the last 6 months, and I don't really see that they have big gaps that you would, be worried about, but it's something to take into consideration. So just like a lot of the symbols that we featured today, I see a bottom forming. Let me look over at the options chain. Oh my gosh. There's a lot of activity on this option chain, trading every $2.50. So let's come on over here. Yeah, $2.50 would still do us, right? I'm looking to make sure I can choose options that would surround my price. This may be an opportunity to open up a position. Like I said, for all the other symbols we've featured today, make sure you wait for the signal and it's a validated signal. It's not just a single indicator telling you to buy or sell. Make sure you have a signal. And then with this particular one, I could also see you trying a different strategy. So instead of buying this stock or buying a back month option, this might be one that we sell naked puts against, or it's called cash secured puts. So for instance, I could see selling cash secured puts at 37.50. If I came over here to the April 21 option and I looked at the 37.50 put, what that means is that I would get for every contract that I sold, I would get $31. Not much money, but it is money. And I would only buy this stock if somebody was willing to sell it to me for $37.50. It's currently trading at $40.76. So I get my $31, and then if somebody wants to sell me the stock for $37.50, I get to buy the stock at a discount. If they don't, then April 21 comes around, that's fine, and then I sell it for May. And I do the same thing. I say I'm willing to pay $37.50 for that, putting that order out there. You get to collect $31 per contract. Make sure you have the $37.50 per share. And remember, a contract has 100 shares in it. So $37.50 times 100 is $3,750. So make sure you have $3,750 in the bank ready to buy this thing, because if somebody does agree to sell it to you, you need to have the cash. But I could see doing that, collecting that premium in anticipation of buying the stock at a really low discounted price when somebody's willing to pay, sell it to you for that. And then once you have the stock, we could sell call premium against it and do the same thing. So yeah, there's a lot of ways to play JD.com. I'm glad that you pointed it out. I could see getting into it. It looks like a choice stock. I'm going to have to add this to my potential watch list. I like to look at it and explore it a little bit further.
Yeah, I'm seeing a very similar trend with a lot of the charts that we were just going. They're like all forming this bottom, and it's going to be like, well, I guess that would be kind of like heading into the summer is where we'll get the answers, some of those next answers where it'll dictate the move. So appreciate that, Pam from Riverside. Looks like we're getting close on our time here today, AJ. It is a holiday. A lot of people hopefully aren't trading, right? Because you can't, right?
You can't be trading, at least not our markets today. Most European markets are closed too. This is the Good Friday holiday ahead of Easter Sunday.
Right. Let's do something good for the family, for the community, right? Do a little bit of research maybe if you have some time. I got some good weather over here, so I'm feeling good heading into the weekend. And I have a question. Do you have any thoughts on former President Trump being arraigned in potentially facing 34 counts of felony.
Doesn't affect my markets.
Oh my God.
So
It's a fascinating thing that's the reality of the world we live in.
it's so much sensationalism. It's not even interesting to me. It's so old news.
And it has no impact on the market, it seems like.
Mm.
No.
No, and it has no impact on my local little family situation or any of my friends. So I'm just trying as much as I can to filter it
Yep,
out.
I see it in my feeds. I try and scroll past it, but it's there and it's just interesting.
And it's just like people are so curious, I think, and they get wrapped up and they want to take sides, but it's not even it's nothing to me.
All right. With that, AJ, I appreciate your time. Everybody, we appreciate you
Yeah.
tuning in.
I got my summer leisure clothes on because it's holiday, so I'm as soon as this show is over, I'm gonna go have some fun for this long
Awesome.
weekend.
Well, we won't keep you, AJ. If anyone watching, listening for the first time enjoyed it, please show some support. Hit that like, hit that subscribe, hit that follow button.
Subscribe.
Share it with
Tell
your
your friends.
Sign up for the freebies that we threw into the chat. You'll get some great information along the way. AJ, thank you once again. We'll catch everybody next week.
Shaka.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.